Good morning and welcome back to the channel. It's Thursday pre-market, and today we're zeroing in on Opendoor Technologies, ticker symbol OPEN, which continues to be one of the most talked about stocks on the market. After a volatile few days, the stock held its ground and closed flat in Wednesday's aftermarket session. While some might have expected more movement given the recent headlines, staying flat is a sign of quiet strength, especially when you consider the context. Let's get into what's going on. First, the big news. Opendoor officially postponed the reverse stock split vote until August 27, 2025. That's nearly a month of breathing room. This delay gives the stock time to prove itself without being prematurely chopped up by a reverse split, something many retail investors were dreading. This move was well received by the market. In fact, after the announcement, Opendoor stock surged in the pre-market, at one point up more than 6%. While it ultimately cooled off and finished the day unchanged in the after hours, that spike revealed something important. Bullish energy is still in the tank. And it's not just the delay that's making waves. This week, Opendoor has maintained its footing around the $2 mark, even after a brutal drop from recent highs near $5. That shows resilience. For those who have followed our past videos, you know we've been watching this zone closely. Holding $2 is critical. It's not just a technical level, it's a psychological flaw. Now, with the split vote postponed, some of the anxiety in the market has been diffused. That gives bulls an opening to reframe the conversation around what's really going to matter next: earnings. Let's not get ahead of ourselves. Yes, there's still risk. Yes, volatility is likely to continue. But here's what we know. Opendoor has made it clear that it will only proceed with a reverse split if absolutely necessary to maintain Nasdaq listing requirements. That gives the stock a kind of buffer. The company isn't trying to manipulate the float or shock the market unnecessarily. Instead, they're allowing time for the stock to organically stabilize, and perhaps even recover further heading into August. And recover it might. There's been growing buzz in retail circles about Opendoor's upside potential. If you scan Reddit, StockTwits, and X, you'll see posts framing Open as the next possible multi-bagger. Retail is back, and this stock is at the center of the conversation. The sentiment is being fueled by short interest, which remains high. Many of these positions were built when the stock was trading below $1.50. That means even with recent pullbacks, most shorts are underwater. And that's a dangerous place to be, especially if the stock starts inching back toward $2.40 or $2.60. This is a game of pressure. And while shorts aren't likely to cover en masse just yet, any bullish catalyst, a positive pre-earnings update, an analyst upgrade, or broader housing market strength could tip the scales quickly. Speaking of housing, we need to talk macro. Recent housing data has been encouraging. Mortgage rates have pulled back slightly from their peak. Buyer traffic is ticking up in certain metro areas. And inventory, though still tight, is becoming a bit more fluid. That's good news for Opendoor, which thrives in markets with transaction volume. Let's not forget, this is a real business solving a real problem. They're not just flipping homes. They're building infrastructure to make home buying and selling more streamlined, data-driven, and scalable. It's a bold vision, and if they get it right, they'll have a first-mover advantage in a space that could be worth tens of billions. In fact, some long-term analyst models have floated price targets as high as $82, based on future growth, market share capture, and improving unit economics. While that may seem far off, it's not just hot air. It's based on Opendoor executing in a more favorable housing cycle and managing costs effectively. Now, let's circle back to the technicals. The stock has shown strong support at $2. That level has been tested multiple times and continues to hold. Bulls are now watching for a return to $2.20, then $2.40, both of which could act as launchpads for a further rally. What's interesting is that despite the volatility, institutional interest in Opendoor has not disappeared. In fact, several funds have added to positions in recent months, a sign that there's belief in the long-term story. So what's the play right now? If you're a long-term holder, this might be a period of accumulation. If you're a trader, the levels to watch are clear. $2 is your floor, and $2.40 is your breakout trigger. And of course, earnings are the next big event. They're expected in the coming weeks, and that could be the true catalyst that sets the tone for the rest of the year. If Opendoor can show even modest revenue growth, tighter margins, or a shift toward break-even, the stock could re-rate quickly. The story is not over. In fact, It feels like we're just entering a new chapter. Let's recap the key points. The reverse split vote has been postponed to August 27th, giving the stock breathing room. Wednesday's after-hour session was flat, but pre-market saw a 6% pop, showing bullish sentiment. Support at $2 is strong, and the retail community remains engaged. Short positions are still underwater, meaning more squeeze potential. Housing market data is improving, a bullish macro signal. Earnings are the next big catalyst, and expectations are building. If you're bullish on Opendoor's long-term potential, this might be one of the most interesting setups we've seen all year. So let us know your thoughts in the comments. Is Opendoor about to break higher? Or will we see more consolidation ahead of earnings? Either way, we'll be tracking it daily. Be sure to like, subscribe, and hit the bell so you don't miss our next update. Thanks for watching, and good luck in the markets.